Hello, and welcome to What You Need to Know, the Canadian Policast by Bluesky Strategy Group. We hope you're all keeping well in these extraordinary times, and thank you for joining us this morning. I'm Geoff Turner, and today it is my pleasure to be joined by a familiar face here in Ottawa, Kevin Page, former Parliamentary Budget Officer and now the founding president and CEO of the Institute for Fiscal Studies and Democracy at the University of Ottawa. Welcome, Kevin. Thank you for joining us today. The fall fiscal update yesterday, of course, was the biggest news this fall and sets quite a path for us. So I'm happy to have you on board here to answer some questions. And I'd like to do a bit of a deeper dive, hopefully in some things we may not hear in the news, so that our listeners can get a bit of a deeper take on what happened and what's going to happen in the next number of months. So perhaps if I can start with some table setting, Kevin, we've heard a lot of discussion and interchangeable talk about an economic update versus a mini budget. This fall economic statement, of course, comes in unprecedented time. So I'm just curious if you could position for us how kind of structurally and situationally this statement yesterday compares to the norms, but any exceptional circumstances, perhaps like 2008, 2009.
Yeah, thanks, Geoff. Great to be with you and Bluesky, and thank you for the invitation. So I would start off by saying that there's nothing really normal about this financial cycle, thanks to COVID-19, the pandemic, and that's true in Canada. It's true in many other countries as well. So a lot of the norms, for Canada, having a budget table just before the start of a fiscal year, just the way Parliament approves legislation through the course of the year. You typically, like an update in that context, it takes place in the fall. It's really a mid-year review exercise. And sometimes you can get measures, like we've seen that, more often than not. But usually they tend to be small measures, and the government sort of holds its power until a budget. So this year is like, there was no budget. So we didn't get off the start. There was emergency spending legislation so that it would allow the government and Parliament to approve authorities for these new fiscal supports in a rapid pace. We had something called an economic and fiscal snapshot in July, which was really just, the government sort of saying, here's my receipts. This is where I think these fiscal supports will end up just for this year. We had a speech from the throne in the fall, which really put out a policy agenda, which included a lot of spending. And then we had like this, yesterday, an economic statement, which really in many ways was a mini budget. It had, if you look at it, there was quite a bit of new spending in it. Like some of it was reflective of what was in the speech from the throne in terms of new initiatives, but it was highlighted a lot of announcements where we saw numbers for stronger fiscal supports for 2020-21. So you start totaling all that up, Geoff, just in putting in numbers perspective, there's like $100 billion of fiscal measures that were not in the fiscal snapshot last July. So that's $100 billion over 2 years. We're a $2 trillion economy. In a typical budget, the $100 billion could be the total outlay in a new, budget. So it was a mini budget.
Yeah, and I think you also saw a number of not just spending on pandemic responses, but and those new initiatives that you say. I think the government itself obviously faced operationally a number of impacts. I'm thinking things like Via Rail as a top line example, where they had to backstop some of their agencies and operations at things like Parks Canada too. So you obviously had to do that mid-cycle rather than waiting until next year too. I think the next area I'd like to go to is this concept of fiscal anchor versus fiscal guardrails. And I think, our listeners probably have heard a lot of these terms. The top line story in these events always gravitates to the deficit figure. It's pretty natural for most, top level coverage. And that's often accompanied with concern, of course, about limits and affordability of that ultimate debt. And in this cycle, we heard a lot about the need for a fiscal anchor from some, and the government's sort of chosen response here has been around the term fiscal guardrail, which I think is a relatively new term that they may have just created. But the fiscal guardrail idea says, we're not going to set a limit or a time frame except to say when certain conditions are met. Can you just help us really kind of unpack the difference between that anchor, which I think is much more kind of cemented into place, and guardrails, which is a little bit more dynamic, and maybe where you land as an expert in this on that discussion, because it's been quite an active one amongst people with the background in this about what's the most prudent approach.
Yeah, so Geoff, like this concept of a fiscal anchor is really taking force over the past couple of decades, particularly since the 2008-9 financial crisis. I think if, IMF or the OECD would probably, refer to it as a decision around what a prudent debt target would be, over the medium term, really some horizon, which is usually somewhere over the next 5 years. Like, is there a debt target? So not the budgetary balance, which is like changes from year to year, but a debt, which is the accumulation of all deficits since Confederation. Like, is there a debt target that is prudent? And, what is a prudent level? And so there's usually some consideration by different countries. Is there a debt threshold for a country? There are countries that are developing countries that have relatively low debt thresholds. People don't want to lend so generously to some developing economies. But then there are big economies like, Japan and the United States, which are kind of big G7 economies. There's almost not a limit in terms of the amount of debt people would be willing to purchase. So for Canada, a prudent debt target, like we had prior to COVID, we talked about really wasn't so much a debt target, it was some people would call a fiscal rule, a declining debt to GDP ratio. In Canada, at least our net debt numbers, our federal debt numbers relative to GDP were relatively low to other countries. And I think the government thought, in a pre-COVID environment, as long as that number was moving down, it was at a relatively low level, that's a good fiscal rule. And it was simple and it was pretty flexible. So now a debt target really, in the context of an economy that we're going to see an increase of maybe 60% in the debt to GDP ratio in like literally in 1 year, it'll move from 31 to 50%. People are going to start getting worried about, like, hey, what is the fiscal plan to constrain this once the economy recovers? So, in the document we saw yesterday, we see a number of scenarios over the medium term where the debt to GDP ratio, federal debt to GDP is in the 55% range. So the government is kind of hinting that actually might be their target with fiscal stimulus included. But they never said it's their target. They want to have a debate on it. So that's really the concept of fiscal anchor. The government working towards, through its fiscal controls, particularly discretionary spending, trying to get to a target, a debt target. So fiscal guardrails, this is, like, as you say, Geoff, very innovative discussion. Like, again, the government is committing in that it wants to provide fiscal stimulus to kind of jumpstart the economy. There's a question is like, how much stimulus is the right amount? And how do you overlay, what's the profile of that stimulus? Like, you don't want fiscal policy to be pro-cyclical, meaning like we saw in the United States where Donald Trump was cutting taxes, the economy was overheating, and you could create, it's not fiscally responsible over the long term to manage fiscal policy like that. It can actually almost be destabilizing. So guardrails are basically saying, okay, it's kind of like some forward guidance in a fiscal policy term. How do you scope the right size of fiscal stimulus over the medium term? And the government is saying for its indicators, and there's a discussion needs to happen, it wants to focus on the labor market. So it's really like they're saying they're prepared to spend $100 billion over the next 3 years for stimulus, maybe less, maybe $70 billion if the economy recovers strong. And so they're going to follow, their indicators are going to be around employment rates, unemployment levels, and hours. And that will decide whether or not it's time to turn off the taps with respect to stimulus or go for even a bigger stimulus. I think it's kind of an interesting concept. We tend to see it more in monetary policy when central bankers talk about forward guidance, keeping a policy rate low, but then highlighting, indicating they're going to be watching certain indicators, usually the indicators that contribute to inflation. So it's a very new concept. We need to debate it.
Yeah, I think being dynamic in a crisis like this is I would say is important. I think that's the position the government's taken rather than being static, because we can't know what's going to be 6 months down the road from today. And I'm glad you touched on the debt to GDP ratio. I mean, the Liberal government and other governments before them have put a lot of stock in that number, including the 40% number that they were aiming to stay below. And I think, as you said, they're looking to see that bump up. And I'd be curious to see. I think that's where they're going to continue to put their benchmark for fiscal sustainability. But I think this overall conversation, to your point, and you saw it reflected in the document, they said very clearly that they feel that Canada's fiscal position is strong enough to manage that short and medium term dynamism. Moving on just into maybe some specific numbers areas, and I have the opportunity, it's a bugaboo of mine in recession reporting, and having been around the Ontario context in 2008, 2009, and in the years that followed there. Often in this reporting around deficit figures or government spending in response to these recessions, the big numbers get framed, and they often completely exclude the fact that a big portion of that number is revenue loss. governments, like a business, like anybody, are impacted. Fewer taxes coming in from payrolls, especially in this recession. Like, sales taxes are probably through the floor. You have a whole bunch of people who may default on their taxes. So there's a ton of revenue loss that happens. And I just like to bring it up because I rarely see it covered in our discourse, at a high level. And just to give some folks some numbers in this discussion, the decline in revenue booked in this fall economic statement is 60 billion lower than it was last year. And normally your revenue grows year over year. So that's even lower in real terms for 2020. We went from 335 billion in revenue to 275 projected for 2020. So that's a significant drop. But the government is saying that they expect to be back to their 2019 level of revenue, about $335 billion by next year. And I'm just curious if you can help us with your long experience, including in that previous recession, how you think the revenue equation will factor into the recovery from this recession. And do you think those expectations of recovery revenue getting back to a level next year are reasonable? And I guess just an add-on question, the government is also following the lead of, other progressive parties and voters, and starting to announce that it's going to come for revenue from some sources that have been a hot topic, things like big digital companies, wealthy individuals, and then of course, the thing that we've been talking about for some years now, pollution pricing, which they've tagged that way, and will inevitably rise over time and bring in revenue. So I'm curious how much you in addition to just the overall revenue picture in a recession budget, how do you see those new revenue tools, which in normal times would be really substantive, I think, but in the backdrop of where we are today, how much of it is it a drop in the bucket, or is it more substantial than that as we dig out of this? Or is that kind of baseline revenue the most important thing to get back through economic activity?
Yes, there's a lot of good questions there, Geoff, as always from you. So I would say two parts, really. The part like the short-term movements of tax revenues, non-tax revenues, and the other question about really tax policy going forward, the need for additional revenues, where will we find them, and what is reasonable, and in the context of fiscal sustainability and growth. I would say in the short term, like what we're seeing, in the revenue loss, just because of the weakness of the economy, is historic. Again, so the recession is historic. It's an economic lockdown. We're the updated numbers for 2020, real GDP numbers anyways, just a decline of, in the neighborhood of like 5.8%, which is enormous. Almost twice as big as the decline that we saw in 2009. So, really we, economists like yourself, others will look at revenues and say, in general, they'll move with the economy. So yeah, there was a massive loss in tax revenues. So income revenues, obviously sales tax, GST level revenues, customs, premiums, some of the non-tax revenues. Also, there's some big write-offs there that were showing up on the revenue side. So I think like the tax part of it was probably about half of that $50-60 billion in terms of the year-over-year decline. And then there was some non-tax related stuff, prices of premiums for Bank of Canada, et cetera. So really big crown corporation losses that were showing up on the revenue side. That is an enormous contributor to the deficit. So if you look, Geoff, again, we're looking at a deficit of about $380 billion, now forecast. Again, if you look at the direct fiscal supports in that year, 2020-21, like it's in the neighborhood of $275 billion. Again, this is insane. If you think about a $2 trillion economy, then you overlay that with a $50-60 billion revenue loss, you're kind of explaining away a $380 billion deficit with just, 2 or 3 big components. Like, is it reasonable to see revenues bounce back up to kind of 2019 levels for 2021? I think it is reasonable if we do get the kind of bounce back they're talking about. So again, the government's talking about, a real decline in GDP of 5.8%, a bounce back of about 4.8%. So, again, if you just looking at the movements on the tax side, not the non-tax revenue side, I think those numbers are reasonable. And then, as a share of GDP, I think those numbers kind of come back to 2019-20 levels. So from forecasters that look at those numbers, are they properly anchored? Do the movements tend to, reflect some of the cyclical changes? I would say, yeah. There's nothing really that pops out other than, wow, what an amazing shock. in terms of the revenue side, year-over-year decline. I think on your other tax policy point, Geoff, I think that it's definitely, again, the government wanted to send a signal. So for some of those people that are doing well during the COVID-19, like not everybody, a lot of people are hurting, but there are some sectors like the digital sector that are raking in enormous profits. And so that, effectively the government's saying, we think you're fair game to raise taxes. If you're some big corporations and you've been taking advantage of stock options in this environment with buybacks and other things, that we're going to kind of go after you in this environment. Like if you look at the amount of revenue they're going to generate, Geoff, it's small. Like in the context of deficits and in the $380 billion range, 17.5 percentage points of GDP declining to $120 billion. We're talking about like $1 billion, $2 billion a year, from both of those two sources. So, but I stand there. They're important signals, I think, for politically. I think for again, minority parliament, they're telling the NDP they're not afraid to go after these companies. But I think that the broader point, Geoff, around fiscal sustainability, if the government's going to move forward with some of those SFT initiatives, if you're really talking about big movements towards pharmacare, or an expansive program for early childhood development, or a bigger program for training, or a big program for infrastructure, like we do not have the revenues to finance all those programs on an annual basis. So revenues are going to have to go up. I don't see the government really talking about raising revenues for the next year or so. But, if we get the vaccine, it's distributed, 2022 growth has snapped back. I think there's going to have to be a conversation about how much debt do we really want to carry? How much debt, how much fiscal room do we need to deal with the next shock? And so what is fair to the next generation? And so I think revenues are going to have to go up. I think it's fair game. It's income revenues, making more progressive. It's sales tax revenues. Again, it's a big tax reform discussion.
And I think we'll see after a couple of years how the economic growth program that the stimulus program or the Build Back Better agenda is paying dividends or not. And to your point, I think that will also be more clear as we figure out what that structural financing is for those new or bigger commitments the government's making. It's a good segue, I think, into the probably the big news. I mean, there's so much big news yesterday, but especially for private sector interest, there's the stimulus discussion. They've pegged $100 billion or as little as 70 if economic conditions are going well. To create stimulus over 3 years. They're going to focus, of course, on those core areas of green investment, community and equity level investment, and job creation. And I'm curious how you think the government will move that stimulus money once it's decided. And as we all heard yesterday, they're going to spend the winter leading into budget 2020 to decide, which kinds of things they want to use that for, and which specific policies they want to drive. But I'm curious, the existing infrastructure of government, which you'd be very familiar with, in terms of programs and the fiscal flow from the money machine over at the Bank of Canada to the Department of Finance, to a department, to a program stream, to an application stream, et cetera. How much do you see that kind of existing infrastructure in government being used to funnel this new money? Or do you think the government's going to maybe contemplate a bigger, more kind of Uber approach, centralized, based like a sort of one stimulus program that then has more latitude to do things one-off? And I'm just thinking of projects that may not fit specifically in any of those kind of existing, buckets that are out there. So I just wanted to get your sense on how you think the fiscal architecture inside government will handle that quantum of money going out to all manner of recipients.
Yeah, again, I feel like Donald Trump when he did the 60-minute interview and he walked out because the questions were too tough. So I'm putting you on notice, Geoff, that I may have to walk away from this interview if you keep asking me these.
You only got 4 minutes remaining on my counter, Kevin, so we're almost there.
Okay, so no sense walking out. Yeah, I think really two parts to that question, Geoff. I would say one part is like, how is that, first of all, there's gonna be a massive debate. You tell the country that you have $100 billion to spend over 3 years. And, you could just imagine, that all kinds of stakeholders, lobbyists, premiers, territorial leaders, mayors are going to have great ideas. So it's kind of an unusual tactic to say, I'm prepared to spend this amount of money and then leave it blank. And then let's carve it up. Because your phone's going to be ringing every minute about, I want this, I want that. Here's a great idea for stimulus. So the government's going to have to manage that. Like we're going to have a pre-budget discussion on steroids now because the government basically put this, indicated that there's this money to spend. Like I also think, like again, you could debate whether it's too much money or not even enough money in a strange way. Like if you believe the climate scientists, as an example, and all the work Mr. Carney's doing at the UN for climate action and finance, like you could probably, governments around the world are going to have, you could eat up all of that so-called stimulus on a green reset. A lot of it could be infrastructure related. And so you see numbers like that, if you kind of normalize them in a Canadian context, talked about in the United States and the EU. So like that money could just basically go to green infrastructure. And so again, I don't know that that's really sustainable, but if that was the policy, as an example, and there will be pressure to do that from around the world, that would have major implications for how you funnel that money. And I think there's a concern like in Canada that we don't do infrastructure very well, and that there's been these international studies that we waste on a lot of these big projects. It could be 30% pure waste, or in terms of time and efficiency of getting this money out the door, and just the value for money calculations. So like UK has spent a lot of time in the past 10 years launching a national needs assessment and then building plans around real data. We don't have any of that infrastructure in place. So, Minister McKenna, if she really wants to get the money out the door in an effective way, as an example, we're going to need a whole new way of doing infrastructure planning and financing. And I think a lot of that can go green. But I think at the end of the day, like premiers are going to line up and say, I need money for healthcare. And I need money. Municipalities are going to need money to deal with infrastructure bills they can no longer afford because they've lost revenues. So again, we need a better answer in terms of how that money is going to flow. And you're absolutely right to say that the stock of debt, it's going to continue to climb. People are going to worry, start to think about, okay, just how much debt is there floating around, not just Canadian debt, but US debt. How much of that has to be, monetized or not monetized, but, brought onto bank accounts, balance sheets. Do we start to worry about turning that debt over? There's like a couple of pages and buried in the annex on the debt management strategy. Another one of those questions that nobody talks about, but I'm sure people like you are going to get to in the days ahead. So not a complete response, Geoff, but like you can debate whether $100 billion is enough or not enough, and you could take one file like climate change, and you could eat all that up quite easily in terms of electrifying our energy grid.
I'm reminded of one of my favorite sayings from inside government, which especially when applied to infrastructure, but it can apply other places too, which is you can build it fast, you can build it cheap, or you can build it well. Pick two.
Yeah.
I think we'll see a bit of that in what you were talking about as well. Kevin, I want to thank you very much on behalf of my colleagues and our clients here at Bluesky and all those watching today. It is an open access program here, and we're really pleased to have your expertise and to have this conversation. Rest assured, I have 2 or 3 other questions I would have loved to have gotten to around, in particular, provincial and sort of these national programs that are kind of outside the constitutional reach, but that will have to be for another day. And once again, much appreciated, and best of luck as you continue to parse through that document and provide your expert lens on things through IFSID and for the public too. I think you continue in that really important role even after your public service position. So thank you.
Thank you, Geoff.
Thanks again to Kevin Page for joining me today, and all the best to him and his family for the rest of 2020. And we do look forward to having him back in 2021 for conversations just like this. Lots more to come in this crazy year. And thanks to you for tuning in to What You Need to Know, a Canadian Policast with Bluesky Strategy Group's team of political observers. I hope you have a great day. Stay well, everyone.
Bluesky Strategy Group is one of Canada's leading public affairs firms. For government relations, lobbying, and strategic communications advice across Canada, visit us at blueskystrategygroup.com.